Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Today in the Econ Show, we're going to go through coronavirus, what's happening in the US globally as we look at mobility, some high frequency data points. Then we're going to dig in a bit more into what's happening in the US when we're looking at things like retail, real estate, industrial production, and then we're going to do a bigger show on the new trade deal, what's happening with China, and by the trade deal I mean the Asian trade deal, and what does this mean for globalization as a whole. So just before we get into it, just like to remind you, please like, share, subscribe. Your support is appreciated, and we always appreciate comments and some of the back and forth in the comment section below. So just to kind of jump right in, here you can see that we showed this yesterday in the EIA show, but this is just looking at really the COVID metrics throughout the U.S. So we'll look at it on global as well, but this is just kind of important to appreciate what's happening right now. So the daily test will keep going higher. I know, just driving here again today, we saw people around the block looking to get tested, as those who are going away, maybe going on vacation, going to see family, want to make sure that they're negative prior to seeing family for Thanksgiving next week. So obviously you're going to find asymptomatics, you're going to find things that you maybe weren't expecting, which is increasing the daily cases. The bigger issue is really the currently hospitalized and then the deaths starting to creep higher. So when we look at the currently hospitalized, I know anecdotally I can say here, the hospitals continue to see an increase day over day. Clearly it's here we're now above the two previous waves, coming into this third spike. Luckily or not so lucky, however you want to look at it, because obviously deaths is never a desired outcome, but it still remains well below where we were in the first wave. We're now above where we were in the second. But again, it's just also because there's more, but you have to think about, we do understand how to treat this better. We do understand the symptoms, how to go after this. And at the same time, we know who's the most impacted, what type of ailments impacted the most, so we can protect or at least address that up front, which should limit deaths. But again, the currently hospitalized is the one to watch when we're considering where will lockdowns happen, will they increase. This is going to be the key metric that a lot of governments will use to say, look, we need to roll back, we need to slow things down, because we need to make sure that the hospitals and general infrastructure remain protected. So when we think about, okay, well, who is responding? And then this is looking at the government Stringency Index. You can see where the responses are. So Italy, obviously in Europe, we've seen an increase in stringency. France is moving towards the top end of that range. And based on the commentary that we've gotten so far, that is not going to be rolled back. They're going to maintain that essentially through December. And now, mind you, this was as of November 12th. So this is something that is only increased, like the UK, France are on the same levels. Germany, Italy will remain on the same level as well. The US is something to watch because we could see an increase in stringency across the board. So this is one that I would expect to start to creep a little bit higher. The bigger ones to watch is also going to be India. As the festivals end, what is the response in terms of, okay, well, are there case increases? Are there no case increases? Because this will be something that would impact not only just economic throughput, but also what would happen on a global trade level when we're considering case count, hospitalization. So again, something to consider when we're thinking about GDP growth as we go through Q4, and then what does that launch us into as we head into 2021. So now just looking at the death side of the equation, as we see the death tolls pushing higher, you can see that Europe totals are the ones that are really being the big drivers. And then the US is also starting to creep higher. So those are the two big components right now as we're looking out to say, okay, well, what is the big driver of the increase in deaths through November 9th, which, if we look at from the very first graphic, you can see that the U.S. is now becoming a much bigger piece of this pie. So the overall pie is extending higher. Europe totals, obviously, some big drivers as well. they have so far peaked in terms of case count. It doesn't mean that the death tally will, but again, it goes cases, hospitalizations, deaths in terms of, when we're increasing, it goes cases, hospitalization, deaths. So that's why we always want to see where those are. So right now it looks like case counts have peaked towards the end of October, beginning of November. So that's something that is hopeful to get under control. Now, when we look at it on a global level, obviously we are not ones to believe Chinese data, but you can ignore that side of the equation. But here you can see where the mapping out of the cases, of the overall deaths, where they have been realized at the greatest quantity. So obviously India is a big one as well. Brazil, US, Mexico. These are things to consider as we start to look at, okay, well, where could we see stringencies? Where could we see additional lockdowns? Not only just deaths, but also what is the biggest driver when we're thinking about, okay, well, where are we seeing hospitalizations? Where are we seeing pressure? Because, we've had some good news when it comes to the vaccine, but how fast can it be distributed? Where can it be distributed? How? Who's paying for it? There's a lot of logistical problems to really come up against when we're looking at this on a global scale to figure out where does this get disseminated, and then how quickly can we see some normalcy. Now, the problem is, my running joke is, you don't just get a vaccine, a job, and $10,000 cash. That's not how this works. There is a certain amount of slowdown in the economy that just won't come roaring back in 2021. Some of these jobs were done just because they no longer had the purpose in their current position. And COVID just happened to be the reason for letting them go. So there's going to be a slowdown, or we're just not going to see the same type of response that I think is being expected in the market as a whole. Now, when we break it down in terms of total deaths as we go through the current situation in the U.S., you can see where obviously the biggest impacts are, and the Northeast is one of them, with New York being one of the worst. Which is why when we consider where are these lockdowns going to happen, like right now, there's data coming out that de Blasio is closing New York City schools, the largest school system in the country. These are things to consider as we look at, okay, well, if you close down schools, who's going to take care of the children? Who's going to provide food for them? There are things in logistics, and this becomes onerous on the actual parents as well. Because can they get to work? How are they going to get to work? Who's going to watch the children? There are so many problems that start to come in, which again just weigh on just general economic activity, which will be a problem as we head through Q4, because the Atlanta Fed estimate shifted higher again today, saying that we're going to see about 5% growth in Q4. And it's just, as we look forward, as we consider what's happening with coronavirus through the end of the year, it's just difficult to see that kind of growth in Q4. And then what do we expect as we go into Q1 of 2021? So here is, looking at the U.S., now looking at Europe, you can see where the case counts are at their highest in terms of 13-day COVID-19 case notification rate per 100,000 weeks, just based on where we're sitting. Here you can see where that growth is really being struck and why there's such a problem in that southern part of Europe. Now, there's really nothing to say that, so far the lockdowns have started to work. We have seen case counts come down. Hospitalizations still remain a problem, but we still have pressure when we're considering mobilization, people moving throughout the countries. As we've talked about in the EIA show again yesterday, we talked about airlines, how there's less flights going. Last week we talked about where Europe is seeing a big increase in unemployment. That hasn't changed. Their lockdowns are still in place. France is saying they're going to be in place through the end of the year. It's likely to see a lot of these lockdowns extend through at least the next 2 weeks, if not the next through year end. And it's just going to put a big, essentially an anchor on where not only just Q1, but also 2021, where is GDP growth going to come from? And then as we look into the emerging markets, well, if the developed markets are struggling, how are the emerging markets going to respond? Are they going to see additional pain? And the short answer, in my opinion, is yes. Lagarde is going to come out with a quote unquote new bazooka to help the EU, which, I mean, in the idea is it just going to crash the euro, or, because the euro has been very strong, is it going to support the dollar? It's just the continuous race to the bottom. So anyone who's been looking at Bitcoin can attest to the fact that the race to the bottom for fiat has been good for essentially alternatives to the fiat currency. Now, when we think about the mobility tracker, this is just kind of a natural way to say, well, what does activity look like? What are people doing? And here you can see the falling aspect. This was in the EIA show. It's just important to really appreciate what does this mean for economic throughput, jobs, people going to work. This is going to be the biggest overarching theme. It's not, now we won't see the same type of slowdown we saw in March, in April, but we will see additional pressure that I think is going to persist through year end. Then when we look to the U.S., something very similar. It's just we're not seeing the same type of mobility. We will see a little bit of an increase just for Thanksgiving. Now, it will still be down year over year, but on a week over week level, they will be better just because there will be some movement, or at least some more movement than previous. But on a year over year level, we expect a significant decline. And then if you think about the decline on a year over year level, when we're looking at travel and people going to see family, well, what does that mean for Black Friday? What does that mean for Black Friday deals? Again, same problems as we're thinking about shopping and holiday spending, which we'll cover in segment 2 and 3. So then when we go to our favorite slides, the ones that the Bloomberg economics team puts together and that we try to put some context around, is again economic activity, this high frequency data, which shows the significant roll off, which really continued and will continue through at least the end of November. You see the pressure just really dragging everything down. Japan has been fairly sideways. There's been some commentary in terms of Tokyo potentially going into additional restrictions, still early on that information, and then we'll talk about some Tokyo aspects and Japanese aspects in the last segment. But the general move is to the downside. Yeah, the U.S. is starting to roll over a little bit. That's just something that we think is going to accelerate, which now, will it follow the path of France? Unlikely, but it will follow a downward move in terms of just that shift to the downside. And, Spain is starting to kind of normalize. Italy's starting to hopefully factor out and flatten out a little bit. But again, you can see that everything is being pulled to that, let's say down, to that 75, 60%, which is just going to be a bigger problem. Now, when we think about, okay, this is the more up-to-date information, but where are we in regards to new cases? So when we look at the U.S., looking at the solid circle, which is obviously as of November 11th. So if we take it to November 18th, you can see that on a case count level, we're still moving to the right. Things are still shifting down. And if we look at where things are for Germany, for the UK, for Italy, for France, everything is down and to the right, which is not where you want to be when we're considering daily activity as well as case counts. Now, with case counts being part of it, you're starting to see that things are starting to shift a little bit to the left, specifically in Europe. But again, there's not enough to say that we're going to get to a lot of this normalcy, just because they want to make sure that they get in front of some of these case counts. The U.S. is going to continue to get worse over the next coming, the next update of this report for obvious reasons, pressure across the board, and just general activity in terms of imports, as well as just trade is slowing down, and it's not something that we think is going to adjust in the near term. Then when we look at some of the emerging markets, you can see India's gotten much better when we're looking at case counts, but the festival season just ending. I know I keep saying, and I said a lot in the AIA show, saying it more here. As the festival ends, we have to wait those 2 weeks to see, are we going to see an increase in cases? Were people safe when they went to travel? Are we going to see some of these increases, which could be a concern as we're looking at overall activity? Because India has gotten a little bit better. It's something that we're hoping to see continue in the right direction. But, just based on kind of where some of the data is starting to point to on the diesel side, we're seeing a little bit of a slowdown. Still not enough to say one way or the other, but it's just something to keep in mind. South Africa, Russia's getting worse, just based on their proximity to obviously Europe and just, well, I should say Western Europe in terms of some of these case counts as it goes into Eastern Europe. And these general activity on an economic level remains a problem. China is something that we're going to talk about in way more detail in the last segment to kind of show on how some of this economic activity is not as good as portrayed. I know, shocking, China lies. But it's just something that we want to really kind of dig into and understand, well, how bad is the lie? What does it actually mean for growth going forward? And then when we look at some of the estimates, as we've seen, some of the GDP talk, so China is expected to have about 1.9%, based on IMF. The IMF data, Vietnam is supposed to see some growth, which just based on Vietnam, Taiwan, some of the other Southeast Asian nations, it's actually likely. And the reason why I say actually is because they did a great job of really going after coronavirus, really trying to show you need to strike early, get aggressive, use masks, and try to get in front of it. And at the same time, Vietnam is seeing a significant amount of investment as people move out of China. So if you move out of China, we're expecting to see not only an increase in just consumer activity, but also foreign investment and direct investment within the country. So Vietnam does make some semblance of sense. South Korea, all of these are ones that, in terms of where we expect to see 2020 makes, the Eurozone is one that is going to continue to get a little bit worse just based on how long some of these lockdowns last. And the U.S. is one that we think is going to drift a little bit to the left, and again, coming down to what do lockdowns do? Will we see an increase across the board, which would just impact general activity? Now, the place that we always see a problem is the assumption that 2021 is just going to take away all of the bad that happened in 2020. And it's not that simple. And there's a lot of pain and problems that come into a lot of this, not only just on a geopolitical level, but also just where we were heading from 2018 into 2019 into 2020. So when you look at 2018 and then you look at 2019, everything kept getting a little bit slower, pressure across the board. And then 2020 was one where we expected additional slowdowns as we have shown in the EIA show last week in terms of trade, in the report coming out on Friday when we really talk more about trade, what global flows look like. But that doesn't just reverse in 2021. That doesn't just all of a sudden go away. The coronavirus all of a sudden doesn't end. And the vaccines still take time to really disseminate and hopefully work their magic, which is why 2021 still remains something I think well above where expectations are as we look at that percentage on an annual increase. It's just one that is going to be a problem as we go forward. And I think you're starting to see some of those estimates get really kind of walked back. Now, as we look at the U.S. and we consider all the spending that has been done on a global level, we can look at, well, what is the U.S. spending? And we look at COVID-19 money tracker, and you can see the Federal Reserve actions, what was estimated and what has currently been spent so far. Legislative, there's still an unknown. And the problem is if things are getting better based on the way the market is pricing, if you look at the Dow, you look at the S&P 500, you look at the NASDAQ, based on this, maybe things are fine. Why would I rush to spend more money that the government doesn't have? Just if we look at just borrowing, if things are improving, so maybe it just takes time to work through the system. So, but at the same, just giving an idea of kind of where those benefits or where things are. And as we see a potential new Fed governor waiting to get, Judy Shelton she was denied the first time, but because Senator McConnell voted no, he can wait for some of the Republicans to come back from quarantine because 3 of them had to quarantine to vote again. She has tended to be one that wants to turn off the printer or at least delay the printing. But again, it's just going to come down to how does this look going forward. But there's still some spare capacity within the structure. And then the legislative is always going to be, are we going to get the stimulus that everybody keeps promising us because they like to use it as tape bombs, if you will. Now, when we look at net debt to GDP, you can see the net debt to GDP ratios continue to shift higher. There's an assumption that as we go into 2022, things start to not only stop, but at least some declines in spending. It's unlikely if you just look at the way the trend is. The trend has always been fairly up, not really, the slope doesn't really ever come down. The bigger ones that are going to be to watch is going to be Germany, is going to be Japan, Italy, and then obviously the U.S. as we consider kind of where things sit going forward, because the net debt to GDP ratios on an aggregate, when we're looking at just overall, it's just a problem. You're just pulling future growth forward because the interest expense is going to just be a huge drain on not only tax revenue, but also going to limit the total investments that you have the ability to make. The U.S. is the orange line, which is moving along essentially with the UK and France as we continue to shift higher. The idea is that we're going to get to about 110% of GDP, net debt to GDP ratio. So it's just a huge weight on GDP growth, which is why there's just an inherent problem as we go forward. And this is why we always keep talking about debt, focusing on debt. This is why there's a problem, is because these debt levels are so onerous, not just on a country level, but also a corporate level. And it just going to act as those headwinds as we've talked about going on the GDP growth into 2021, because this is where we see those problems really starting to add up.